Hi, I'm Jim Jubak, and welcome to my YouTube video for August 19th. I'm wearing my Franz Kafka t-shirt from the Kafka Museum in Prague because we're going to take a deep dive down a kind of Kafka-esque rabbit hole today. But before we do that, if you want more of my content online, my free site is jubakpicks.com and my subscription site is jubakam.com. You find those both down below. Okay, so we all know that the Chinese stock market has been, what should we say, in retreat. We've wiped about $1 trillion off of market cap in Chinese stocks since the beginning of the year. We've had a crackdown on everything from DiDi Global, which is a ride-sharing company, to such stars as Alibaba and Tencent, Meituan. All these stocks are down massively. You know, hedge funds file reports about their holdings, and in the most recent one, which is dated June 30th, I've seen a number of hedge funds buying Chinese stocks. So that, for example, Daniel Loeb, a well-known name, has added shares of DiDi to his hedge fund. Melvin Capital added shares of JD.com. I think both of those are well, I think one of those, DiDi I'm not sure about, but JD.com, I put in a group of Chinese stocks that I would like to own. The title of this video is 3 China stocks to buy, but not now. And the ones I'm going to focus on are Alibaba, Tencent, and JD.com. And I really stress the not now. These stocks are down again today because we've had more news about crackdowns, regulatory crackdowns. Tencent came out and said, hey, guys, expect more regulatory crackdowns, they say, on companies that do live streaming, and any company that collects data and uses it for advertising, which is Alibaba, JD, and Tencent. We've seen rumors in the education sector, which got slammed by the Chinese government saying we don't want education companies making a profit on their activities, especially after school tutoring. And most recently, we've had another speech by Xi Jinping that basically said, hey, you know, we have to improve the income inequalities in the country. There are too many people who are too rich and too many people who are too poor. We need to solve this problem. If this is an ideological campaign, I think very clearly designed to tamp down the entrepreneur class. Xi Jinping and other parts of the Chinese Communist Party leadership have decided that entrepreneurs were a potential center of independent policy, thought, activity. All these things make me say, hey, it's probably too early, but let's look at some charts and I'll show you what I mean. So the first chart I'm going to look at is Alibaba. What people have been paying attention to is this part. This is the part that starts in with the highs in late 2020 and takes in the huge drop recently in 2021 and all this stuff about. What tends to get overlooked a little bit is even here, after this huge drop, and Alibaba is down 26% in 2021, and we're only in August, is that if you take a longer view, a chart that looks at, say, the 5-year, and at this level, current levels, we're only rolling back things until 2019. We're still got all of this really great growth in 2017, 2018. If we're looking at something that is as profound as I think we are looking at in the Chinese economy and the role of private Chinese companies, I don't think that that you ought to be looking at a short-term chart and you ought to be thinking about long-term, because this is really a long-term unfolding of events. If we look at the chart for Tencent, we see sort of the same thing. Again, a huge drop recently, but look at where we still are in comparison to where we've been. This rollback for Tencent really only takes us back to June of 2020. So that's only about a year's worth of gains given up. Doesn't really take into account this or this massive thing. So again, I would argue that we're really too early, given the fact that the news stories about regulatory moves and ownership and changes in the basic system of who owns the data for internet online companies is still unfolding. I think you're too early. Last one is JD. Same pattern, bloop. Only this time you're really looking at even less of the gains have unfolded. JD is down about 25.5% for 2021, but you've still got all of this advance to look at. So if I'm looking at Chinese companies to own, these are the three that I would target. I would target Alibaba, Tencent, and JD. I would not say that this is a good price to buy, because I think despite the 20 to 25% pullbacks, we're still looking at stocks that have had a huge run before this all corrected, and we're still looking at lots of uncertainty going forward about what's going on in the Chinese economy, what's going on in the Chinese regulatory environment. Think of it this way. Let's say you owned Amazon, and tomorrow you woke up and the Federal Trade Commission has said, hey, you know, Amazon, you really don't own the customer data that you use to prioritize things on the Amazon site, or for Prime or anything like that, or for marketing. What do you think that would do to the value of Amazon? Well, that's what you're still looking at as an open question in China. How much of the data these companies own will they wind up really owning? And what limits will be put on the way that they can use it? And that's the real crux of the issue that hasn't yet been determined. And that's why I like these stocks for the position they're built up, but I still don't really like the price. This is Jim Jubak. Thanks for watching. If you like this video, give it a thumbs up, like, subscribe to my YouTube channel. If you want more of my content, go to jubakpicks.com down below. That's my free site, or my subscription site with 6 portfolios instead of 3. And that's jubakam.com. Thanks for watching.